Navigating the Future of Software in Firmware. I'm Will Foxley with Blockspace Media. I run the Mining Pod. Feel free to check that out on YouTube and Spotify. And then we have Medi Naseri of LoD and Lincoin, sort of. And Dan Lawrence of Foreman. Welcome to the stage, guys. We'll start off. You guys both have 3 letters in your company names. Is there a specific reason for that?
We're the giants in the space.
You're the giants, so you set the standard. Okay. All things serious, though, we're going to dive into the efficiencies you can gain from using different softwares, the reason for using software when mining Bitcoin. And honestly, I think some people don't even know where this sits in the stack. So, Medi, I'll throw it to you first. Kind of explain, the general software we're talking about here. And we're talking about Bitcoin pool, middleware for understanding miner management, and then the miner themselves.
Hey everyone, Medi Naseri here from LoD. You hear me? Testing. Cool. Thanks, Will. If I want to go through the type of software and products that a mining operation should use, I should probably start with a mining pool, a firmware, and a mine management software and energy strategy. So these are the stack of product that the mining operation should be using. Our company has been trying to innovate across these 4 different platforms, except firmware. So we started as a Bitcoin mining pool in 2021, and then we started serving Bitcoin miners through operations management software and energy strategy software. So that's technically where we are serving miners across these 4 or 3 different verticals.
And just for those who are not super familiar with this, because I remember when I first Dan, it might have been when I met you first time at the that Rocktail Bitcoin mining conference in 2021.
Scott's conference.
I didn't really know that this part of the industry existed. Why does the software matter? What's happening with it? So I'll throw it to you, Dan. What are we even discussing here?
So I guess there's a few parts to it. Medi hit on some of those. The miner management, so you can view that as what it takes to run a facility. And if you're a small-scale hobby miner, we started out, so we started small-scale hobby mining back in 2017. When you've got 5 miners, you know each one of them very intimately. We basically gave ours names. If it goes offline, you know about it right away. It was a little bit of a pain in the ass because ours was an hour away from where I lived in Baltimore. Our mine was in Westminster, Maryland, so we built software so we didn't have to, so we could manage it remotely. But when you're managing 5 miners, it's easy because there's only 5. When you're managing 50,000, it becomes a problem of scale. So that's kind of when we started building management software for ourselves. We got up to 11. We didn't get to be big miners, but still managing 11 was still a pain in the ass because you have to keep opening every single web page on every single one of them and checking it and checking it and checking it. And it's a scale problem. So that's kind of where we started off with mine management software. It evolved a lot over time. Energy management software, curtailment software, inventory and assets, ticketing, a lot of life cycle stuff, but really it all started at software to tell me when it's on, software to tell me when it's off, and if it's off, let's try to automate the fix.
And if you're in the crowd and are having a hard time hearing, there are a few seats up here. We can grab headphones or anything like that. Okay, so it's intuitive. Automation's nice. Computers are nice to kind of fix those problems for us. So that certainly makes sense. When it comes to Bitcoin mining, though, a lot of people like to do it themselves. They like to make their own Bitcoin miners. They like to build their own mines. Tell me about the off-the-shelf experience for buying a software package, though. Why not build this yourself? And why is this formalized into certain companies like LoD or like Foreman? Medi, I'll throw that to you.
So I will continue on what Dan said. Mining operations has become so sophisticated in the past few years that has made it impossible to run them as you used to in 2016-17. Mining operation is not anymore about uptime. Mining companies can now be called organizations. So it's not like a couple people running a mine. They have different roles, different type of personas with different needs. So any of these have a certain need. However, as the industry is evolving, it is becoming a standard, the way people manage operations, which means software is also becoming standard in certain ways. Like there are modules that you are going to need, like operations management, inventory management, ticketing, energy. So this is becoming a standard. But some people choose the way of building their own solution, which sounds good, sounds like a good idea at the beginning. But the way that we see this industry evolving, I think it's going to be very tough to maintain a product internally. And that kind of counts as reinventing the wheel internally when that wheel is already available in the market at a very reasonable price, at much lower cost, at much better quality. And believe me, like this is the case for us. I'm sure this is the case for Foreman too. We are building 24/7 for many years. And I bet it's going to be tough for a company that whose focus is not, the main focus is not building a software for mine management to actually build a good one. So that's my take.
Yeah, I think that's exactly right. So if you think about our unit economics, high level, you can go on our website. You can see generally we're cost per machine per month. Without some of the bells and whistles, it's probably 60 cents per miner per month, but we do stuff for volume. The more you add, the cheaper it gets, all that. But 60 cents per miner per month for a 10 megawatt mine, that's probably 22 grand, 23 grand a year for the software that will run the entire site. And software to run the entire site includes automated curtailment, and that could unlock, for 10 megs, you can make $2 million off if you put it into the market. So are you going to find a great developer that can build software that can get you generating that much revenue on a 23 grand salary? It's not going to be a great developer. So, I would love to have great developers on my team for 23 grand. If you know of any of them, please send them my way. But, good developer, 120, 150, depending on where you are. So it just doesn't make sense at that scale to build your own software. You get what you want, exactly what you want, if you have an engineering team to build it out. But you're going to have 5, 10 developers building it year round. And if you ask a lot of the large scale public miners out there, some of them will say, our hash rate's proprietary, how we do it, it's special sauce. If you ask the whales, they just say, we're just plugging in machines. So what was maybe a super, super, super competitive edge back in the day, machine automation, machine management, everything, it's kind of become the standard. So it's not really too much special sauce there. You just need to have it if you want to even be in the game. So I think it's just transitional out every time. It doesn't make sense to build it your own anymore.
So like the miner management stuff is pretty simple. Miner goes on rack A, point 1, A1, keep that, stack them up. Ticketing software, especially if you're running a hosting service, that's super important. Customers complaining about uptime or whatever, they can file a ticket directly. Normally I don't talk with one of you guys, but normally talk to the intermediary, but you guys have a ticketing software built in there. The game changer on the revenue side, of course, is the energy, right? The fact that there's going to be some sort of demand response feature built into this middleware that you guys operate. So, Dan, I'm actually curious, when did you guys start operating, pushing that energy side of things? And then tell us a little bit about the unit economics for you guys and for a customer when it comes to the energy side of Foreman.
So I can talk about a lot of energy stuff, but 2-3 years ago, I didn't even know how the grid works. I just know I go over to the wall, I flip a light switch, and the lights come on, and that's about the extent that I needed. I didn't know you can actually be out there and take your load and put it into the market and make it a resource to the grid and start making money off of it, because when the grid needs power, they can either turn on more power or they can turn consumers off. So it's kind of like your insurance policy. So I didn't know anything about that 2-3 years ago. How we found it was a total accident back at Scott's conference in the Kalahari, super weird, cool hotel. It's like an amusement park / hotel combo. We were demoing our software, and we built the ability for an operator. We had a customer out in Montana, 100 megawatt site running off of coal, and Montana gets pretty damn cold. And part of that means if you're running off coal, you have to be able to get coal to the site. So you're literally trucking it in. And if a big blizzard comes through, you can't get the coal to the site. So they'd have to run the site at less output. So rather than 100 megawatts, maybe they're running it at 30 megawatts for 3 times a days. So they needed the ability to say, I need to bring this site down from 100 megawatts down to 30 megawatts, and I'm going to run degraded for the next week or so. And there was no way to really easily do that. So they said to us, hey, can you make a quick little simple way where I can go into a user interface and say, power me down 70 megawatts and put all the machines to sleep so then I can just lower the output of my coal? We said, sure. And then when we're at Scott's conference, a guy from a CSP walks up to us, and he is in the purple shirt or blue shirt over there, and he says, wait a second, you mean to tell me your software can turn the mine off and then it can turn it back on? We should talk. And they specialize in demand response, so we worked together, and I don't know, 2.5 years, we started automating curtailment.
I'm trying to ask the right question, but how much revenue do you think you guys generated for customers through that one meeting over the last 2.5 years?
So my numbers are a little conflated here. We've done about 3 million megawatt hours of curtailment, 3 million gigawatt hours. I forgot. It's on our website. At a high level, we do a lot of curtailment, so it could be around demand response automation. It could be around turning mines on and off around pricing. We've saved our customers, I think, at this point, just around pricing, probably $80 million over the last 2 years. And that's just turning off and avoiding high pricing. Demand response automation, it really comes down to the market that you're in. 100 megawatt mine could make $20 million, could make even more than that. It really depends on where you are. So it just depends on what market you're in and how much load you have and what the markets are paying.
So tens of millions is an
Tens of millions, yeah. So you can expect, could be 50 grand per megawatt year, 250 grand per megawatt year. It really comes down to where you are and how the market looks.
Glad these guys are paying attention because they might make some money. Medi, same question to you, but you come from a different side of things, right? You guys were trying to do a pool first. Pool game is pretty tough, but you decided to stick around the Bitcoin mining software business, and you guys started building out LoD, and there's inventory systems, there's energy systems built within it. So walk us through like how you guys came to market with your product.
So back in 2021, when we launched a mining pool service, we were trying to make it competitive through like providing better features, better UX, all those things. But what we figured out was that market is very commoditized. So when you are selling a product in that market, the only way that you can compete is to offering an extra 0.5% discount to your customer to convince them use your product. But something was happening in the market back then, as Daniel said. People was starting talking about energy markets and energy strategy. Like that industry has been a closed industry for decades. That has been out there, but energy professionals, they usually don't share much. No offense to him. But so the knowledge has been out there, but people don't know about it. Bitcoin miners started to notice that opportunity, that hey, we can actually capitalize on this opportunity and this market. And we too, like we started to learning about this opportunity. Like the background of me and my team is electrical engineering, so that was quite easy and fast for us to grasp the concept. And we started building the solution. What we noticed along the way was if you are running your mining operation right, probably 30% of your revenue comes from mining and 70% comes from your power strategy. So if you deploy, or let's say there are two different layers. If you develop the right strategy and execute that strategy, you are going to be able to unlock that extra 70%. But as I said, there are the two layers. Execution is important, but planning and strategy is also as important.
Okay, pivoting a little bit. Interesting thing for the crowd here. You guys are two of the most dominant software solutions out there. It's joking about the giants thing earlier, but if you come into the mining game, there's only a few options for this software, and I'm curious about that market. And so when we talk about software as a service in general, it normally is a pretty tough market. How many competitors to QuickBooks can everyone name? It's basically QuickBooks, right? So there's not a ton of different options out there. But when you're looking at the Bitcoin mining landscape, we got a few options. how do you guys think about the competitive nature of this part of the Bitcoin mining landscape? And do you think it's actually beneficial to Bitcoin to have sort of a winner takes all for this sort of software?
I think the mine management software, or like it lays within a category called IoT, as we call it. So the chance of this industry getting commoditized is much less because of the amount of room for innovation. So you can stand out by innovating through different like features and like adding different products or unlocking new revenue opportunities. So I think that's not gonna happen, but at the end of the day, having more options in the market is good for the consumer, and that's good for us as builders because that keeps us busy building and innovating and trying to help our partners stay ahead of the game. So I think that's the case here, but at the end of the day, as you said, SaaS is a very tough business. People gotta compete on the price, eventually drive the price to zero or almost to the margins. I don't see that happen very quickly in this market though.
It's definitely good to have competitors out there because, I mean, if you weren't on Foreman, Foreman has looked mostly the same since we built it. I built part of the initial one, and it looked like shit, and it did until probably a couple of years ago. Once you build a rough-looking foundation, you just keep adding on top of it. So we actually did a kind of a reskin, make it look a little more modern, a little more fresh. Probably about a year and a half ago, we're doing actually a whole front-end overhaul now because competition's here, and we're in a spot where we need to maintain our market share. The tricky part about this market is we're not selling toilet paper. Not everybody out there is buying mine management software. If I walk down the street or go to the grocery store and I ask everybody in there, are you a Bitcoin miner? I can tell you everybody's going to say no. So there's only so many opportunities for us to sell to. The other caveat to that is the people that we can sell to, if they're not running at scale, they might not be around too much longer because there's going to be a lot of M&A. People are starting to consolidate. Look at what just happened in PJM. Some hundreds of megawatts just got bought by a very large pubco miner. So there's also less opportunities, less labels for us to even go after. So I think our strategy is really deeper with each customer, adding ticketing, inventory, executing energy strategies, trying to find our way into commodity supply deals, trying to find ways where we're a necessity on one side of the equation, and we're also a necessity on the other side. Operations side, we're a necessity. Even supply side, what might be a necessity for miners who often don't have a lot of collateral to get a supply contract. So it's not a lot of people we can sell to out there, which means that we're getting pretty creative.
In terms of the different features, which you guys have both brought up, what sort of things are you guys looking at innovating on? So we have the ticketing, we have the miner management software, we have the energy side of things. Where else can we go with this sort of software? Because it is a Bitcoin miner at the end of the day, right? It's just a box that kind of hums and spits out coins. What else is your typical consumer, your mega miner, your pubco, wanting from you guys?
I mean, there is not a one-size-fits-all, but as a provider, we have to have every feature. And whoever comes in, they are going to pick what they're looking for. So we have to be ready to serve the client with their needs. However, we internally classify features and tools into two categories. Either that's a vitamin or that's an aspirin. So if that's a vitamin, that's just better UX, easier usefulness of the product. But some aspects of the product, such as the energy aspect, is more of an aspirin. This is critical. This is going to save a business or let's say add to their longevity and sustainability. So depending on those, we mostly try to maintain the vitamins, but also very much invest most of our resources on the critical needs of the user that could help their business grow.
I would just really like to echo one thing. We end up in so many calls with very, very large customers, and every single one of them has a feature request, and all of them seem to be, I need this or else I'm very unhappy. So that's the unfortunate part of building software in this space. When there's only so many people you can sell to, they also tend to have a lot of very strong opinions. And accepting all of those opinions in the past was how we got to where we are. You could ask us to build anything, and we would build it that day. Those days are unfortunately gone because I was the one that built a lot of that stuff, and it got us into a little bit of a snag. But, everybody's got great ideas, and Foreman would be nothing without our customers because our sitemap, triggers and the automation, inventory and assets, ticketing, workflow, user management, all that stuff all came out of user request. So we are super receptive to the stuff that people ask for. It's really hard balancing act when we're trying to maintain a competitive advantage while also really sprucing up the features that people are wanting and ask for. It's a big balancing act that we have to do. I'd never thought, though, when we started this thing, we thought it was going to be super simple, just rebooting, changing pools, pushing firmware, kind of BTC tools, that command line utility or desktop utility, but just kind of on steroids. Now, 9 times out of 10, we're probably talking about compliance or SOC 1 or SOC 2 or ISO 27001, or somebody's talking about data retention. It's gotten a lot less sexy, but it's still just as important. And if you're a very large company, you need all those compliance checkboxes checked. So a lot of the features we build end up being around compliance.
Okay, so now we have to talk about AI. This is supposed to be a Bitcoin panel, but we have to talk about it. So Foreman launched in the summer a new AI program, and then Medi, you guys have some AI tooling within your software as well. And then there's just like the general idea that the AI HPC market is probably going to be larger, is larger right now and will continue to be larger than Bitcoin mining. I think it's probably a fair guesstimate, just in terms of like your guys' market shares. So when we're looking at the future of growing the software, how do you guys think about allocating developer hours to Bitcoin mining versus AI HPC? Where's the overlap? And generally, how are you thinking about building different features for your different applications? Dan, I'll throw it to you first for that one.
So the product that we announced, I've been saying 60 days ago, but I've been saying that for probably 60 days. So
it's been like 6 months.
Yeah, okay. We'll call it 6 months ago.
Yeah.
We kind of just took a Hail Mary approach, and we said, well, we built automated curtailment for Bitcoin mining. The assumption that we have is that getting firm load on the grid is just going to be harder and harder and harder every time. So if you expect to be able to show up with a 100 megawatt site and just have it get interconnected and not have to ever talk about flexibility, we are assuming that that's not going to be the case, and it's not going to be as easy moving forward. So we built a product where you can actually soft curtail GPUs. And the interesting thing about it is traditionally if you were to like pause or shift something around, you might have to pay a kind of a state save. You can kind of view training as like playing a game. And every time you're progressing through that game, you have to stop and save, and the screen goes black for a second, and then you come back to the game and you keep moving, and then you save. If you stop, or if you stop a job, depending on the type, you might have to go all the way back to where your last save point was. So it can be costly to run back. So we actually do a pauseless curtailment of GPUs, and that keeps things moving. Just sometimes they get really damn slow, and that gives a lot of power back to the grid. So we built that as kind of like a Hail Mary approach. Let's start up the conversations. A lot of the AI HPC companies out there understand they're going to have to be flexible. I think it's probably going to be some regulatory pushback. We're not going to be able to probably get gigs and gigs and gigs of gas generators, running 24/7. Batteries are expensive to deploy, so flexibility is going to have to come somewhere. So that's kind of where we are on the AI HPC side, just proving that the technology can be flexible. And then we're working on a large pilot now with one of our pubco miners turning GPU deployment. And I think we're going to have our first soft curtailment with them to kind of get AI load in the market. That's the future of our business, though. We started off Bitcoin miner management. We became facility management. Now we consider ourselves to be a little more large flexible load curtailment software. And large flexible loads, Bitcoin mining, it's AI HPC, and there's other industries we're looking at beyond that. So it's really all around executing energy strategies. That's our strategy.
Medi, same question to you.
So we have a kind of different approach to energy management for compute. So we self-identify as an energy intelligent computing platform, like not necessarily Bitcoin focused or HPC focused. We started as a Bitcoin mining solution, but what we learned along the way was that our point of strength is actually power strategy. As a matter of fact, power strategy is a very generic product. It can be used in technically any industry, anyone who is consuming power out of the grid. With that in mind, we started to look into HPC or high performance computing to see how can we execute these strategies on HPC data centers. That led us to a new mindset around compute. We now see compute very similar to a diesel engine. When you are running a diesel engine, there are a couple inputs. You have to put fuel in and air, and you have to control the mixture between the two. In compute industry, we have two inputs. One is energy, the other one is workload. As a company in mining sector, Bitcoin mining sector, we were doing this. We were managing the flow of workloads through the Bitcoin mining pool and managing the flow of energy through our IoT management system. We are implementing the same concept on HPC and AI, routing workloads and managing workloads and deferring workloads based on the energy strategy enforced by the grid, based on whatever program is there, like price responsiveness, for CP, ancillary services, demand response. So we believe that industry should be served through workload management rather than direct energy management because of what they have in place. They have been building that industry for 50 years. So we can't just show up and say, hey, let's change what you have been doing for 50 years. So we have to look for innovative ways, non-invasive ways to manage their energy usage. So that's kind of our mindset and approach. That's why we are introducing our new product, which is a workload management solution for HPC and AI.
Nice. Some good news there. Okay, well, let's kind of wrap up and kind of finish with some final thoughts. Dan, what do you think like the market looks like for what you guys are doing in, say, 5 years? Bitcoin mining rewards go down every 4 years with the halving. There's more competition than ever. There's more M&A than ever. These pubcos matter a lot. Seems like little guys are getting squeezed out. AI HPC is growing parabolically. Who knows if that continues? But are you guys servicing Bitcoin miners that much in 5 years, or is it just going to be this mixed bag, kind of like you said a second ago?
We're definitely serving Bitcoin miners in 5 years. We're serving Bitcoin miners forever, Will.
Everything we price in Bitcoin.
Yes. It's how many customers are we serving? It's probably less, and it's not because it's probably more machines but less customers, and that's just because M&A and people are consolidating. You have to have a lot of capital. You have to have a lot of collateral to be able to get great rates and good commodity structures. So it's getting condensed down. That's why we're really focusing on energy strategies and how do we make these mines stay profitable, and it's going to be more creative around that. It's definitely going to be less players, though, less customers for us to approach, which means that I think we're both going to have to work very, very hard to keep the customers that we have and make sure that they're all incredibly very happy.
Medi, same question to you. What does 5 years from now look like?
As Daniel said, like big guys are getting bigger, but the smaller guys are either merging or just disappearing. So I think in 5 years, there would be much bigger miners with much different needs and much different strategies. So if we want to be serving this market, we have to be ready to kind of serve their specific needs with their new leads. I mean, most probably we will see Bitcoin miners co-locate with other types of energy assets. That's going to become a big trend in the next 5 years. So we will probably have no other choice other than like merging into other spaces, like being ready to serve other types of assets who co-locate with Bitcoin miners. That doesn't mean that we have to make big changes. Like that's the same thing for us or for Foreman. Probably the same technology, same type of tools should be applied to new types of energy consumers. The strategies probably going to get more sophisticated because there is more types of energy consumers and more types of energy sources coming in. But man, that's going to be very exciting. That's going to be very exciting.
Awesome. Okay, we will close out there. There's a LoD booth over here and a Foreman booth over here if you're interested in learning more about middleware for Bitcoin mining. Thanks, guys.
Thank you.
Thanks, everyone.